Okay, you know what we'll do? We will, because I want to get started. So we'll just wait as people come in, and it's lunchtime, and people have Zoom fatigue, so you never know how many people show up. I'd like to welcome everyone that's here. In the next 26 minutes or so, I'm going to have a conversation with Dino. I'll introduce him in a second, and I'll introduce the program a little bit and myself. So this is a recruitment seminar for the Masters of Financial Innovation and Technology. Today, we had a great event last night on open banking and payments modernization. Today, we're going to talk a little bit more, I think, in depth about technology and financial services and delivery, and maybe dispel some of the myths about technology. I shouldn't say the myths, but some of the misconceptions. At least one of the misconceptions I had on Monday about big iron and mainframes. We'll get into. Kara, do I have control of the slides, or do you? Yes, there we go. So that's me. I'm the Associate Professor of Finance. I'm the Director of the MFIT, also Director of Research for the Institute of Sustainable Finance. But no one is here to see me. We're all here to see, and as am I, here to see Dino. Dino, I was Googling you today, and I saw your condo up in Toronto, I think, somewhere. I don't know if you still have that, but it looked like a beautiful condo. I guess that was when you were still in Canada as the head of IBM Canada. Dino is now the general manager of IBM's financial services market. You support 5,000 financial services firms. So I guess if they're buying it, then you know about it. You're focused on transformation, responsible for leading client relationships, integrating IBM capabilities with clients. You were previously the senior managing director for HSBC. And so if anyone's going to know what's going on in financial services in North America, it's going to be you. As I mentioned, you used to be the president, or the former president of IBM Canada. I mean, I could go through everything in your bio. It would probably take me the whole time. I think it'd be a good way to summarize it would be that it's an honor to have you here. You're also involved in, I would say, extracurricular activities. You started IBM's STEM for Girls program, educating over 8,000 girls across the country. I thought that was particularly interesting because one of the issues that we talked about in one of our previous sessions was getting more women and more diversity in finance. And we're hoping that through the MFIT we can do it. You've got a Bachelor of Commerce, unfortunately, I would say, from McMaster University, but there's still a good school. You got your MBA from Queen's. It's not the only reason you're here, but certainly a good reason to have you. And with that, I'd like to just welcome you. And maybe you can say a couple words about yourself, about your role, and just things that you wanna talk about, and we'll get the conversation going.
Well, thank you very much, Ryan. I appreciate it. I wanted to do this session when you brought it up to me because I think AI and data is going to be the most critical topic, in particular in financial services, for the next 5 years or more. And this is where the real differentiation and business value comes in. Out of my 34 years in technology, working with IBM in various parts of the world and various roles, the most exciting area is financial services because they really tend to drive innovation and technology. And what I find is that out of all the years we've been engaged, AI and data is, hang on a second, my dog's got a chewy. I got to get it out of it.
It makes it real,
I know, it's funny, but it has the greatest impact on their business. And we hear about clients who they want to move to cloud, they want to do this, they want to do that, but ultimately the business leaders want insights on their customers, on their business. They want to understand where they need to transform and where they need to go to with their business. And data and AI is what gives them those insights. So those investments are significant. And over the past year, during the pandemic, we at IBM have grown that business significantly. both on the consulting side, the software side, and the hardware technology side. So I've been fortunate during this time that our business boomed over the past 12 months. And a lot of companies realized how far behind they are. And, even though I've been with IBM for 34 years, I'm so excited about this marketplace and the opportunities around AI. And it keeps me inspired and motivated to engage with clients. I'm very active with clients, as you mentioned. When I led Canada, I worked with all the Canadian banks, CEO level. And then and at Citi, I was also the managing director for 6 years during the financial crisis, and saw how data and AI helped them identify where they needed to shift and move, and globally. So I hope that gives you enough of my background. I got a dog, as you know. You heard him in the background. He keeps me company. He's a COVID dog.
We heard that too. You live close to the ocean. The dog likes the ocean.
I go to the beach every morning and throw 1,000 balls, and he still comes home energized.
Sounds like my 16-year-old daughter.
And by the way, I am Canadian. For those that are wondering, I'm Canadian and an American citizen, and I've lived most everywhere. So in Asia, Europe, and US and Canada.
Great. I've got I think a good opening question, or just sort of a poke. Anyways, not a poke, but a prod. What do you think has changed the most? I mean, as someone who sees not only what financial services firms are promising to their customers, but what they're actually ordering and delivering. What do you think the biggest change in terms of technology for financial services over the last 5 years or the last 12 months? I know the pandemic has changed a lot, but what's different now that we didn't see 5 years ago?
Well, first of all, at the CEO level, technology is not only a priority, but CEOs understand it. They understand the power of AI. They understand the power of agility by moving your infrastructure to the cloud. They understand, that their business exposures, the most significant exposures about things like cybersecurity and ransomware, can put them out of business overnight. So they need to understand, they understand how to protect their clients' data and how to protect their own infrastructure. These topics were never something that CEOs would think about. They'd push it down to the CIO, but it is a critical part of how they run their business. And in fact, during COVID, they realized, if I don't understand technology and I can't digitally transform, I don't exist. So it's way beyond the CIO's role. It's at the CEO level. It's at the board level, and really customers are the ones who are driving innovation, because as agility in technology allows you to deliver more to your client votes every day based on their last digital interaction with you, because their ability to shift is as great. It's greater now than ever before, and they exercise that. So, recently, I'd say over the past 24 months, besides seeing a lot of investments and CEOs making investments in AI and resources. And by the way, when I say resources, there's a shortage. There's a shortage of data AI talent. Okay, and but another area is security. I mentioned that. Being able to, leverage your technology, your data to address compliance that's coming down from government agencies saying, you need to make sure you don't have fraudsters. So there's so much data and transactions that are kicked out of their systems every day saying you got to determine whether that was a fraudulent transaction. And it became so labor intensive that AI became critical to really mitigating that cost, as much as possible from the human factor, but the volumes have increased dramatically.
So what's holding, let's just say banks in general, we'll start with the incumbents, what's holding them back from, taking this data? I mean, if you talk to a financial institution, they're sitting on basically the personal ledgers and the business ledgers of hundreds of millions of customers, right? You'd think that, the type of data that a Facebook has is really just a drop in the bucket relative to what my financial institution has about information on what I buy, when I buy it, how I buy it, the time I buy it, whether I buy it on credit or with my own cash, how I invest, how I retire, who my employer is. But they don't seem to be able to generate a whole lot of value from that data relative to what Facebook gets on whether or not I like cat or dog videos.
Right, exactly. I'm continually amazed. I have a conference going on right now that we sponsor, and I'm the host, Reinventing Financial Services. So, it amazes me that Alexa can listen to everything I'm saying in this conversation, and then the next day I get an ad or some kind of promotion related to what I talked about. Okay, so the banks are not that intrusive, but not intentionally. But when they do develop the capability, I know they're going to be very sensitive about being intrusive. Why haven't they been able to harness this? Well, if you go to Fidelity or you go to Morgan Stanley, Vanguard, Schwab, they have a tremendous amount of AI models. But are they relevant? Are they accessing the right data? Are they biased? Right? How antiquated are they? Where are they? They're in a division, they're in a department. Are they enterprise-wide? So the challenge has been when AI first started getting introduced, everybody wanted to put a system in, right? I mean, I put the first Watson system in at Citibank, and they wanted it to be able to answer credit card questions when people called in and reduce the volume. Those are all rudimentary things, right? It's much more sophisticated in what you're able to do. And the number of models that they built, they didn't really have a platform in which they could manage all those models and put those models across the enterprise. And then, of course, their data is so disparate. You have the credit card division separate with their data from the line of credit loan division, from the mortgage division, from the the retail bank division. All that information has been compartmentalized in those and contained there, and maybe moved to a data warehouse or data lake, but it hasn't been taken advantage of holistically, so they can get one single view of the client. I just want to point out there are companies like Snowflake that say, let me ingest your data and you just put it in my data warehouse and then you can access it and do all. Well, that's really I don't want to be negative on Snowflake, but that's really a cop-out. That's a perception that they're creating. The CEO thinks, well, yeah, I just put my data in Snowflake and everybody goes and accesses it. The problem is they're not getting all their data, because the data we're looking at now is your mobile data on 5G. I mean, the transactions are happening at the edge.
Mm-hmm.
Their back office transaction system, all the front end systems, and across your enterprise. You're not going to, as a company, throw all your data into Snowflake. So you really have to be much more sophisticated about virtualizing the view of your data and getting access to it, and then building the models with sophistication and building a platform for your models. So they've been slow to do that. Regulation is limiting, okay, but it really is, embracing it at a level that they need to. If you're contemplating this program, I'll tell you, you're just at the beginning. The beginning of this space, which is going to take off. I draw the analogy to the dot-com boom and bust in 2000. We thought it was over in 2000. I was in San Francisco at the time. Well, it wasn't even the beginning. We thought it was over. And the same thing with data and AI.
Yeah, we're just figuring out how to use it. Really is the way. A lot of people feel like when you talk to them, they feel like they've missed the boat on AI or machine learning or analytics, whatever the nom du jour is. But I say, really, have you seen a lot of job losses yet in financial services in terms of human provision of services? Some, but not a lot. So I mean, I think that's an indication that there probably are more people that are employed now in some form of financial services with the new fintechs than ever before. So I don't think that people are or have missed out yet. One thing when we talked on Monday that I was surprised about, I thought we would both commiserate about how, mainframes have gone the way of the dodo. They're no longer there, and essentially every financial institution is trying to get rid of them. But you told me something interesting about your Q1 2021, or maybe it was Q4 2020, about mainframes that I don't think that I had really considered. Do you want to give us an idea?
Right, so I have a lot of respect for my competitors, a lot of friends working there, but the reality is in financial services in the Americas, I sell about $7 billion a year, okay, which, dwarfs any of my competitors in that space. So, but the fact is, it's where clients are moving. They are moving to the cloud. They're trying to put more of their transaction systems in the cloud. And at the beginning, they were doing that because they were going to supposedly save money until they got their bills from, AWS and Google, and everybody realized, oh my God, I got to pay this fee. So then they shifted to, well, I've got more agility when I put that data out there because I can build applications fast. People build to those platforms, and I get new function at the front end. But over the past year, what we got is a lot of shiny objects, Google, Amazon, building applications that are static, basically at the front end and not connected to the back-end transaction systems. And those back-end transaction systems run the core of businesses. Like if you go to every major bank in Canada, you go to every major bank in the US, you go to every major airline, on and on. They're running it on big mainframe, IBM mainframes, because they're huge systems that can handle the volume of transactions. So when the financial crisis hit and everybody decided to stay home and trade, Fidelity, Schwab, Vanguard, Morgan Stanley, their volumes went through the roof. I mean, they were renting mainframes from us because they couldn't buy them fast enough. And they thought it was a short-term thing. And they realized, hey, we're in here for the long haul. So the volumes are huge. And we've been selling a significant amount of mainframe MIPS, which, by the way, around data and AI, we've enabled that data to become more accessible, agile, and everything, solving those problems they were trying to do on the cloud. But I want to make sure you understand, my intention is to try to move my clients over the long term to the cloud. Mm-hmm. But their core infrastructure is such a significant investment in that platform. They're just not going to shut it off. Why? Because they get more value with data and AI, doing analytics and understanding their clients, building products, etc. The investment in re-platforming technology is no longer justifiable, right? It's how do I get access to the data fast? And that's why, this shift is happening. Now the mindset is, why am I moving off a platform? I need to get access to that data, and I need to do AI. And if I can do that, I'm good.
Yeah, I think the thing that was not really dawned, but I hadn't really considered, is just because data is on a mainframe doesn't mean it's not accessible. You can make that data accessible to people to make analytical models, or to understand it. They can go to a data lake or a warehouse or wherever. That data is still usable, and if that's the plumbing that keeps the financial institution running, why are we going to invest the billions of dollars of reprogramming, sort of recoding everything to a new system when it works?
In fact, what everybody's talking about now, which we just built a very strong capability around our Cloud Pak for data, is being able to virtually see all your data. That I can see the data sitting in Snowflake, I can see this data sitting on my clients' phones or my employees' phones, to my backend systems virtually, right? Yeah. So that I'm not building models hitting each one individually. I've got a platform with a full virtual view. At that point, you don't care where it's running, right? You care that you have access to it.
Yeah, I mean, that echoes what a lot of Jonathan Hunter a couple of weeks ago, and other people I talk to at some of the largest financial institutions, one of the things they're thinking about is, listen, we need to solve these data problems once, because generally it's just repeatable. Right? Once I've gathered the data, put it together, built a model that does a good job of classifying customers, you can use a similar model to classify customers across all different lines of business is really the way. And I think most of the time you hear that what's missing are the people that can sit down and understand the business problem as well as the technical problem. Right? It's not just a technical issue, and it's not just a business issue. It's finding people that can do both.
In fact, we built the cloud for financial services, and what we did that with Bank of America, and we did that so that we could create standards that fintechs could write to, that other providers could build to, so that it can plug and play into any major bank. So what we're trying to do is enable these fintechs to be able to create products, solutions that can easily be consumed by a bank. You know, a bank has security standards, scalability standards, integration, complex integration. Well, you just can't build a piece of code and say, look at this magical fintech capability I have. They go, well, that's interesting. I can't plug it in. I can't scale it. It doesn't have the security. Now we've built to those standards. And if we want to enable that kind of agility across the enterprise, and that's why, you know, that space will continue to evolve dramatically, okay? But our banks aren't Ant Bank, you know, in China. We didn't build it from the ground up to do, you know, a specific set of functions. We have regulation, security, scalability, disaster recovery. I mean, we have all these things that have to exist. And, right? Yeah.
I agree. Well, I don't want to dominate the questions. There is a good question that came in from one of our current students, from Duncan. He would just like to hear some comments on AI's current or future role in the digital experience. So, you know, thinking I'm a customer at a financial institution. How is AI or machine learning or analytics going to change that over the coming years?
Yeah. So, you know, I hold panels with CEOs at banks, you know, all the time. And, you know, we have this kind of discussion about AI, client insight, et cetera. And the CEO for BBVA for the US, they just sold the PNC Bank. He said it best when he said that, you know, banks cannot be intrusive with AI. You know, you'll accept Google, you know, or Alexa listening to you in your house and then regurgitating back, you know, offers as a result of what you said. But if your bank listens to you like that and looks at all the things that you have, both in there with them and outside, when it comes to money, people get really sensitive. You know, they get like, well, how do you know how much I owe on my mortgage? My mortgage isn't with you. How do you know I don't have life insurance? Blah, blah, blah. Oh, you know, all these things. So it has to be very thoughtful and not come across as intrusive. But what the key is banks realize there are going to be fintechs that are going to provide capability that they're not going to provide, and they have to partner, which means the best thing they can do with their clients is get one single view of their financial situation. And in order to do that, other companies have tried, like Mint, which, you know, I wouldn't give my money, all my account numbers to Mint, so that I don't even know who's running it. But if I were to go to Royal Bank or, you know, Bank of America, and I had a trusted relationship with them, they have to continually focus on earning my trust. How do they do that? They give me relevant insights. So they might say, congratulations, you just had a baby, you know, and you might want to start doing a college fund for that baby. Now that's positive. That's a positive interaction, right? Versus sending me an offer in the mail that says, hey, we know you've got this so much outstanding credit card debt, you know, roll it into a loan. You're like, well, how do you know I have that credit card debt? I don't have that credit card with you. So it's got to be very sensitive, and it's got to be based on, you know, what I believe are life events. And you're going to start to see more and more analysis around life events, triggers to drive change. I did a project with Citibank on their data, on their credit card data, which you can't release out to anybody, but we looked at it internally. And we found that if you bought fast food on your credit card at a different town outside of the town you live in, 3 weekends in a row, you had a 93% probability you were moving. Now, why is that important? Well, now you can make a mortgage offer to that client, right? And you can offer access to those clients through mail to a company that wants to sell them a washer and dryer, because I don't know anybody that moved that bought the washer and dryer after they moved in. Right? They buy it before. So, those life events are what they're going to capture, harnessing more and more of their data, and they're going to monetize it. They're going to make money from it.
Yeah. I've got I actually wanted to wrap it up, but I've got a quick question. So one of the things that I realized with Robinhood is that the old way of doing business in financial services isn't necessarily the new way. So do you think that there's room for a fintech-like bank a la Robinhood that really is more intrusive with AI, is much more direct with technology, and does these things that we wouldn't accept from a large incumbent institution? But, from an upstart, we might say, hey, if you give me free banking, you give me, 50 basis points off my loan, you give me all of the stuff, I'll let you do whatever you want with all of my data because that's what I want. And really, that's the Robinhood model, right? They're selling off my trades in order to then give me I don't have to pay for any of my trading. So do you think that something like that is going to happen or could happen, sort of exploding the model?
Yeah, I think both sides will happen. Apple's function on their phone now, where I can decide who gets to see what I'm doing. When you start to do the marketing of one, consumers are going to realize their data is valuable, and they're not going to just let people have it for free, right? So they're going to sign up. You're going to have to pay them to get that data. Because I'm going to say, look, none of my data can get out access to anywhere, because I'm going to have these toggle switches on my phone and everything else to turn it off. And they're going to have to incent me to want to allow them access to it, right? It's no longer free. The consumer is going to, be empowered through these controls to determine that and get compensated. What happens then? These fintechs, where it was the Wild West, that everybody had access to this data, like Robinhood, that when they have to start to pay, it's capital intensive. So which players will dominate, right? I don't think the fintechs will clearly dominate that. I'm very familiar with Robinhood. I've worked with them, and they, I think speed is of the essence if you want to capitalize on free data and client data, because it's not going to be like that anymore. And it's not that some institution is going to charge you. It's going to be, Joe consumer saying, you want to see what I do every day on my finances? Pay me. And they'll make money from it, right?
Yeah. I mean, further to that, the zero trade or the zero commission trades, it took, 2 or 3 weeks for Fidelity, Schwab, Vanguard, sort of all sorts of other financial institutions to jump on essentially the same business model. So it's, that's what I did the deals with them for. I mean, we made it possible, right? We made it possible so they could scale free trades. And, I was talking to Fidelity the other day. I mean, they're going to make money on free trades because they're going to see what you're trading. You're free. It's not free. You're showing them what you're doing, and they're going to get more and more access, or at least be able to entice you to put your needs with their products. Great. Dino, I've already taken 2 extra minutes of your time, and Kara needs some time to talk to the students afterwards. I really appreciate the conversation. Sorry. Before you close,
I want to say, to everybody out there, I've got my Cornell background, Queens, McMaster. I'm doing a Columbia program right now. Queens University by far is ahead of so many others. In fact, I'd say they're leading, especially around data and AI. I think it's a fantastic program. I'm impressed. They started pursuing this space long before it was a popular subject. And I commend you for the program you created in the institution of Queens and what you've been able to do. So I highly recommend try to get into this program, and there are a lot of opportunities.
Perfect. I don't even need to do any marketing after that, do I, Kara?
Oh,
Dino,
that was perfect. Thank you, Dino.
thank
You're
you very
welcome.
much. It was great. I look forward to chatting with you again. And thanks for spending a half an hour with us.
Oh, you're welcome. It was a pleasure. Good luck.
Thank
to
you,
everybody.
Dino.
Thanks,
Thank
Dino.
Thank you, Ryan. I'm just going to share my screen here. And we'll just resume the presentation. So thanks to Dino for that special presentation and discussion with Ryan. I'm now going to spend the next 25 minutes or so just going over the program details that I know some of you are here to hear about. We also have some of our current students on the line today, so this will be old news to them. They do not have to stick around for this, but for anyone interested in applying for our next intake, I will go over some program details right now with you. And if you have any questions about the admissions process or the program, please just pop them into the chat and we will try to answer as we go, but we'll also save a couple minutes at the end to answer questions. So I wanted to start by sharing with you that Smith School of Business at Queen's University has actually been around for over 100 years, establishing the first undergrad commerce degree in Canada. On the left here, you'll see a picture of Goods Hall, which is home to Smith School of Business in Kingston, Ontario. And on the right is our Smith Toronto location, which is situated in downtown Toronto. Now, this MFIT program is based out of Smith, Toronto. So our campus is downtown Toronto, but we will have an opportunity throughout the year to visit Goods Hall in Kingston. And I'll just quickly introduce myself. So I'm Kara McCreary. I am the Assistant Director of the Master Financial Innovation and Technology program, and I work very closely with Ryan on all facets of the program. Today, I'm also joined by our application advisor, Jennifer Mayer. If you apply to the program, you will likely work with her on your application for the admissions committee review. And she will be around at the end to answer any questions and go through some more information on how that admissions process works. So I just want to get into the program now. So as I'm sure you kind of heard Dino allude to, is this program at Smith is the first of its kind. So, Smith School of Business and Queen's University is certainly ahead of the curve by launching this program. And so we launched last November with our inaugural cohort in response to a gap in the market that Dino has, very clearly pointed out. To highlight that gap in the marketplace, I'm going to read a testimonial from the CEO of McKinsey, who said, "I have lots of people who speak the language of business, and I have no problem finding software engineers who speak the language of technology, but I can't find translators who speak both languages." And so the MFIT program is aimed at solving this constant refrain from employers for experts with an understanding of the financial fundamentals, but also with the skills that they need in data science and machine learning. And then, of course, with the rapid advance of things like fintech, blockchain, automated investing, and digital capital markets, this demand only continues to grow. And this Smith MFIT program is aimed at filling those skills gaps. I'm now going to read you two testimonials from our MFIT advisory board members, further highlighting, the gap in the marketplace. So this is from Jennifer Reynolds, and she's the president and CEO of Toronto Finance International. And Jennifer says, "The pace of technological change in the financial services industry has never been greater. As a result, the need for talent that can help accelerate innovation is critical to the success of every organization. The Smith MFIT program is designed to build the pipeline of skilled talent to fill these jobs, which will drive the success of the sector, and its critical contribution to the Canadian economy." And one final testimonial, just to highlight the gap as well that MFIT aims at solving. This is from Mark Tepper, and he's also on our advisory board for the MFIT program. And he is the Vice President of Global Derivatives and Risk Technology at Scotiabank. And Mark says, "Technology is the backbone of modern finance. There are many experts in either technology or finance, but it is very hard to find people with a background in both. The MFIT program is ideally suited to create the experts we need to lead our digital transformation." So as you can see, in our conversations with Dino today, Jonathan Hunter last month, and we have some more special guests lined up for the remainder of this year, as well as those two testimonials. The MFIT program was developed really to address this need and gap in the market for this talent that speak both languages. And now I'll just go quickly through the foundations of the program, so you'll have a better idea of what you'll be learning when in the program. So the program is built on 3 foundations, and the first is data science, which is going to teach you how to deal with the data. So how to collect it, process it, analyze it, visualize it, understand it, and present it. The second layer is, the analytics layer is based on machine learning. So there's analytics in this machine learning layer, which was going to teach the students how to make decisions with the data. How can you automate the decision-making process? How can you understand which factors or variables are driving decisions and the outcomes that we see? And the final third layer, is where we apply these learnings to financial technology. So this encompasses many things, from delivering financial services in a new way to paying for things in a new way, which we talked about last night in a payments modernization panel, and everything in between that essentially is a financial process that we're using technology to solve. And some of the questions you might be wondering, what will the program be able to help you answer? And we've broken those down into components. So in the data science component, you will be able to answer questions like, where can we invest our money? Or how can we lend to someone profitably? The financial analysis component, you will be able to answer questions about what were the risks and what were the returns with the investing that you did or the lending that you did. In the machine learning component, it will help you to speed up or automate the process of figuring out where you will invest or lend, understanding the risks and returns, and it can help us to do this better, cheaper, or faster. And finally, FinTech is where we bring all the learnings together with automated and technology-supported decision-making. So as you're certainly starting to see, the program is about technology and finance, not just one or the other, certainly an integration of the two. And now I'm just going to touch on, how you'll be learning the content as well as the curriculum. So you'll learn how data science and machine learning tools and methodologies work, and you'll learn, how to apply them to different methodologies such as loan pricing, derivative trading, hedging and pricing, risk management, asset management, valuation, prediction of macroeconomic trends, and many, many more. In terms of how the content will be delivered, similar to our Smith programs, really all of our programs at Smith, it's a combination. So it's theory with practical application. So you'll learn the fundamental mathematical and statistical theories and methods, but with a practitioner focus in technology. You'll learn financial theory and how to apply it to real world decision making. And perhaps most importantly, you'll understand the economic impact of that decision. You'll develop power skills such as strategy, innovation, both intrapreneurship and entrepreneurship, lots of teamwork, business acumen, analytic capabilities, of course, leadership and communication. The evaluations in the program is dependent by course, but it really runs the gamut. It includes exams, assignments, team-based projects, and I'd say almost all of our courses, and presentations, which will help you with those communication skills. The courses are broken into 3 different categories, and you'll see that here. So these are all of the courses in the MFIT program. These are listed on our website with course descriptions if you'd like a little bit more detail. But at a high level, I'll just go through them quickly and explain that on the left-hand side are our technical courses, and those are exclusive to the MFIT program. So those are the courses being taught to the students in this program, and that you will learn, that you will take as a student in this program. In the middle are the analytics courses, and those are courses that we will actually be taking alongside the Master of Management Analytics students. So these are courses from our MMA program, and we will take these courses with the analytics students. Similarly, on the right-hand side are the financial courses, which we are going to take with the MFIT students, and that's our Master of Finance program. So those 4 finance courses there, we will be learning alongside the MFIT students as well, similar to analytics. And I just want to mention a footnote down at the bottom. We're always very proud to point this out, that our Master of Management Analytics program was awarded the 2020 UPS George D. Smith Prize, which is an award that recognizes excellence in preparing students to become practitioners of operations, research, and analytics. So that's the curriculum at a glance. As I said, the descriptions are online, and if anyone wants more details, you can always reach out to myself. The programming language tools that you'll learn in the program are the most prominent ones are listed here. And so, you'll see these come up in a lot of your MMA courses, your analytics courses, as well as your technical MFIT courses. So you'll get lots of experience with these programming languages and tools. The schedule for the program, as you probably know, it begins this November, so November 2021, and it will run for 14 months, finishing up in December of next year, so December 2022. During that 14-month program, we'll have 2 residential sessions. The first will be where we're based out of, which is in Smith, Toronto. That's in November. And we'll have a second one in June at Goods Hall in Kingston. The class structure is weeknights and weekends. You'll have anywhere from 1 to 3 classes a week, and you'll have classes anywhere from Monday to Thursday, and on weekends you'll have Saturday or Sunday class, never both for the whole weekend. And in addition to live synchronous courses and lectures, you'll have some asynchronous classes and self-study for some of your courses. And so that means you can go at your own speed, or learn some of the content really at your leisure and on your schedule. So it's a bit of a mix of both. The residential study sessions that I just mentioned, you might have had those before or heard about a residential session. Essentially, they're week-long, anywhere from 5 to 6 day long sessions that are full-time, so in the day. So you'd require about 10 to 11 days off work for the 14 months, where you will immerse yourself as a full-time student, similar to as you would have felt in your undergraduate. So there will be, activities, team building events, networking, of course, curriculum. We'll do a couple of our courses actually during these residential sessions. And we're very excited to be back in our engaging lectures in our world-class learning facilities, both at Smith, Toronto and Goods Hall. So that is looking very hopeful for November. Our faculty, this is a representation of a small representation of our faculty. So these are 4 of what I believe are 15 faculties that teach in our program. Ryan, who you met earlier, the program director, teaches 3 of the courses, and then here are 4 other faculty that we just wanted to share. And really, the faculty is world-class management educators in technology, finance, analytics, and AI. They are industry specialists and practitioners who teach from real market experience. So that's where you're going to get that methodologies mixed with a practitioner focus, which I know is appreciated. I'll quickly touch on our advisory board. We have 18 members on our advisory board, so I've split them into 2 slides. So we'll just pause here for a second. I won't go through them one at a time, but you'll start to see some familiar faces if you are attending, some of our MFIT events. Rob Patterson, for example, was at our payments modernization and open banking panel yesterday evening. And on our second slide here, you'll see Dino Trevisani, who was a familiar face from earlier today. So you'll see we engage with our advisory board on networking events, recruiting sessions, and then as well on content and curriculum, and making sure that we're always, keeping an ear to the ground on industry trends. And as you can expect with this program, things are always changing and evolving as it's just kind of beginning to grow. Our career management framework is is built on 3 different pillars. I do just first want to mention that our Career Advancement Center was recently ranked #1 in the country by the Financial Times rankings of MBA programs. And this MFIT program benefits from the same center. So we are very fortunate and very, very proud of our Career Advancement Center. The 3 pillars, as you can see here, are discover, build, and launch. And essentially how that works throughout your time at Smith and following too as an alumni. You will meet a career counselor at the beginning of the program who will help you build your resume, help you with one-on-one coaching sessions, and make your brand marketable to the recruiters. In the build, you'll find that there will be networking sessions, recruiting events, you can do mock interviews, and finally, in your launch is where, if you are looking to change roles or looking for a promotion, perhaps in your own organization, they'll help you with the job search, the recruitment, even the offer negotiation and evaluation and onboarding with your new employer. The network of classmates and alumni. So this is the average for all of our Smith Toronto programs. As you know, the MFIT program is brand new. So we don't yet have alumni. We will at the end of this year. We'll have our first small class of alumni. So what we've done here is included an average for all of the Smith Toronto programs. Those are the students that you would be taking the finance courses with and the analytics courses with. And so this is just to give you an idea of what the alumni looks like at Smith. And, it's a big group of over 25,000 people strong now. So the average age is 34, average years of work experience is 6.3, and the average years of management experience is 2.5. At Smith in general, for this alumni, as 35% of the class are women, and we're always working hard to see that number grow. In lieu of alumni stats, I wanted to provide you with our current class profile. So this is our inaugural cohort. We started the year with 19 students in the program, so very small program. The average age was 33 years. Average years of work experience was 9. We're about a quarter female. So like I said, trying to improve that for our next year, November. And we had 2 international students. And then our citizenship was, kind of from all over the globe, as you'll see, very, very diverse bunch. And as well as the industries represented were equally as diverse. So we love to see that students are coming from all different industries with different experience, and bringing that knowledge to the classroom and to their classmates is really advantageous. The fees for the program are broken down here, domestic on the left, international on the right. So domestic student would be paying fees of 44,440 Canadian dollars for this November. And an international student would be paying 76,705 Canadian dollars for this November. And I will just add that these fees do include not only your tuition, which of course you would expect, but also your books and learning materials, your meals and accommodations for your residential sessions, and all software licenses. The only thing with the residential session I'll mention, excuse me, is that accommodation when in Toronto will not be provided, as the assumption is that you are making it to class in Toronto, on weeknights and weekends, so that you will have somewhere to stay for the time of the residential session. And the structure for the fees is you would pay a $2,000 deposit upon admittance into the program to hold your spot. And then from there, there's 3 installment payments over the year. And these details are also on our website if you'd like a little bit more detail. I'm now going to introduce my colleague, Jennifer Mayer, and she is the application advisor for the MFIT program. And she'll just touch on the admissions process, and then she and I will be around to answer some questions as we're getting close to the end of our presentation.
Great, thanks, Kara. So as Kara mentioned, so I'm the advisor for the MFIT program. And if you'd like to get things started, you just simply have to submit a resume. And what I'll be doing with your resume is just completing a preliminary assessment to ensure that you do meet the minimum requirements of the program. From that point forward, I'll be guiding you through the process. So outlining the other items that we do look for in order to complete your file, which would include a cover letter, 2 references, typically one from a manager and one from a colleague, get your official transcripts, and then to wrap things up, you'd have an interview with Kara at the end. And then your file would go to the admissions committee for review. So during this entire process, I am providing you feedback throughout the submissions in order to help you present the strongest case to the admissions committee come the time for assessment. We do work on rolling admissions, so what that means is there is no deadline to apply. However, we do have very limited seats in terms of how many spots are available for the program each year, so I always suggest applying sooner than later to secure that spot for that program. As I mentioned, if you're looking to start your application or just have a conversation around the program to see whether or not you fit the profile we're looking for, I am more than happy to do that. We can always schedule a Zoom call or a phone call, whatever works best for you. But there's my contact information, so I encourage you to reach out with any questions that you have.
Thank you, Jen. Thank you very much. And I see we have just a couple minutes left at the end of the session. So if anyone has any questions, just pop them into the chat. Often we get questions about candidacy for applications. And as Jennifer mentioned, shoot her an email and you can start with sending your resume, and that's how we can kind of assess you from there. And so if I don't get any more in the next few minutes here, I'm just going to check quickly. Okay, I don't see any questions coming in, so I want to be cognizant of everyone's time and give you a few minutes back. Thank you all for joining, and thank you, Jennifer, for joining us, and Ryan Reardon and Dino Trevisani. It was a great session. If anyone would like to hear from another advisory board member, we will have another one next week, next month on June 23rd that we will be posting shortly. I just see one question here. Let me just quickly check. So just a question about minimum GPA requirements. So there are not GPA requirements per se for this program. So I would just recommend that you get in touch with Jennifer with the information about your file that you have. So your undergraduate and resume information, and then we can assess you from there. All right, well, thank you, everyone. Thank you for joining us. And as I said, stay tuned for more of these themed webinars from here on out until October. Thank you and have a great day.